Hello, what up guys? So you're welcome to a new video. So in this video I'll be like, giving you guys a breakdown of the trades I've taken previously. I just remember that there's some trades I've not like documented here on YouTube. So I want to share break down this trade for you guys and show you guys how I actually took every one of this trade. And by the way, today is Monday. This is what market is currently looking like. I did not take any trade today, but I think I should have gotten an opportunity here, but it wasn't clear. That was why I left it totally. I did not trade anything. So it's better than taking losses. I'll come back to this later, but let's look at these trades. All right. So we're going to start with this. As you can see, if we go to the 1 hour time frame, you're going to see that I've taken quite a number of trades, not a lot, but quality trades. This was the first one. This is the last one. Then we'll have this. Then we'll have this one here. There's a one here. I'm going to explain that later. Then there's this one. All right. I think this was August. Then since September, this is how it's been. All right. As you can see, I trade only good. I decided to like focus on just one pair, just trade and study good. All right. So that's the thing now. So, but before I dive into the trade breakdown, I want to like give you guys a hint of what I usually like look out for when I'm trading the market. Now, I make use of the daily, the 4 hour, 1 hour, and the 15 and 5 minute time frames. All right. Now, I use the daily and 4 hour to check the trend, overall trend of the market, where market is heading to. This is what I do on the 4 hour and daily time frame. If I don't use the daily, I will use 4 hour. Then when I want to trade, I use the 1 hour, 15 minutes, and 5 minutes. 1 hour for the structure, main structure, right? Then I use 15 minutes for substructure, sometimes it's 30 minutes. But for entry, I use the 5 minute time frame. And this is what it looks like. Let's say market price is in an uptrend. You can see we make that low, then a high, then a higher low, just something like this. Then finally we make a high. Then you see market change character. All right. So most times people would think that this change of character is, market changing overall trend. We've been buying since now that market have changed character, broken this previous low. It's time to start selling and they'll start targeting strong lows. It does not work like that. Most times those change of character that you see are substructures. They just happen so price can pull back into what discount zones. Now, this is how I usually look at them, right? Now, let's look at this. You can see this is a clear uptrend, right? Market was breaking structure to the upside. Then we finally broke this structure. The moment we broke this structure, it has confirmed this low, right? It has confirmed this low for us, all right? These are our swing low. Now, the moment we break here, this low has changed your character. That's when we'll confirm our swing high. That's what a lot of people don't know, all right? They mistake this change of character. They just mark swing lows and swing high randomly. They don't know they actually cause an effect for all of these that happen in the market. All right. That's why they will tell you to understand the story behind every price. Now, this change of character most of the time is to push back price to discount. And if in the process of pushing back price to discount, it eventually breaks that strong low, and that's when you can see we've changed overall trend. Now you can start looking for majorly sales instead of buys. But as long as the trend is still intact, no major um break of structure, any change of character that you're seeing is just a minor move. Most most at times, most of the time, it is just to push price to discount. Now looking at this now, you can see the moment this change of character happened, price reacted from this other block, and since then that was how we dumped down. And you can see as soon as market got to the point where there are a lot of orders and a lot of buy orders and buyers are beginning to like come in the market, you can see it started showing price started showing that intent to go up again. And that was why we had this sweep and a break again to push price up again. All right. So this is very, very simple. You can see the swing low. This swing low becomes a strong low. This becomes the what? The weak high, which is the next drawn liquidity. Now, this is one for buys. I'm actually giving this illustration for buy because most of So I'm actually giving this illustration for buys because most of the trades here are buy trades. All right. I'm also going to give that for sale. I've already explained sell scenario here, which is exactly this. All right. But for now, gold is very bullish. You might likely see the buys than the what's it called? Than the sells. All right. Now look at this one. Look at where price started. Mm, okay, let's start from here. I'm going to analyze these two because the trades are almost with the same strategy, right? So we can see market has been in an uptrend. I'm going to clean off everything so we can see how it works, how I cut this trade. So this first one here was a sell. So let's look at it. So look at market. This was where we made our low. Then market broke this high, which is breakout structure, right? Now after breaking structure, we kept moving up in price. See, we got here. Look at this is 1 hour now. 1 hour structure. We have our swing low at this low, and we haven't gotten our swing high yet because there's no change of character, a substructure change to actually show that price is pushing back. Right? I'm going to clean up this. So if you look at this now, look at a lot of people will mark this high as change of as their swing high, but it's not. There was no change of character here. So that change of character must happen in the substructure time frame to actually push back price. Look at, since we did not get that change of character, you can see how price actually went up again to create another new high. So this is the most recent low here. All right. So and one thing again I want to see is that impulsive break because that's actually what is going to validate everything. So we look at the impulsive break here. So with this impulsive break now, I was looking for market to come back to this breaker block, right? More like something like this. This is during Asian session, tap in here and drop again. So this was my bias on that day, right? So I had my setup was looking this way, my stops above this high at least. Then my target was just on this low. Now look out for one thing I checked again. I picked up my fib to mark from the swing low to the swing high. All right, because we've confirmed swing high now, and we've already broken this structure. Price has already started pushing back to discount zones. All right. Now from this swing, from this fib 2, you can see that price has already tapped into discount, and there's high probability that price might start going up again because we've already achieved what we want to achieve. The reason for that break of structure here is to push back price towards to discount levels. So after pushing it back to discount levels, then we can start moving up again. So that actually makes this setup a very low probability setup. But let's see what happens because price might still decide to come lower before moving up. So that was why I still left that position. But this already price tapping into discount already invalidates this particular setup. It doesn't stand again as high probability or um following our strategy. You can see we got a little bit of reaction to tell you that there were actually some sellers here before market decided to push up. I think we finally hit stop loss on this trade. See, it was news, and that was how we broke that high. Now look at the moment we broke this high now. This becomes our swing low. Look at this low that we made here. This becomes our swing low again. Let me take this off. So this becomes our swing low. So we're going to wait for swing high now to form. And how do we wait for swing high? I usually go to 15 minutes to see when we get that change of character so I can mark my swing high, right? So let's see, this should be fast. All right, we're having a network problem, so I hope this kind of okay. Now this was where we marked our swing low, right? So swing high, if market has broken this low, right? Because this was the last low before we formed this new high. So this would have been our swing high, but we kept moving up up until here. This becomes our swing high. Now what happened? What happened there? Look at how markets came down impulsively to break this low. So that was why we named here our swing high. So the moment market broke this low, how do we trade it? We mark out from this breakout block here. That is the next point market is going to react from. And you can see price came back to that breakout block immediately and we started selling up. All right. So we started moving up again. I think there's some imbalance here the market wanted to fill. So that still attracted price up because there are still some sellers there. All right. But looking at this whole thing, we have our swing low here and our swing high. We actually make this range a very wide one, leaving our 50% level right at this level. So we'll be waiting for price to come to this level to actually, tap up before we start moving up again. But there are some exceptions I've like made to this. Like I said, for one of the like the trade model I showed you guys previously, this is how it works. All right, we'll have a structure, then a substructure that pulls back price to discount, right? Before we start showing intent to move up. This is going to make this video very long, right? Something like this. But then again, we'll have scenarios where market will just rally up, then form like a flag. So most of the times, this flag might not just necessarily tap into discounts and need to break off again and start moving up. So you just have to watch the pattern and see when anyone is forming. You get. So these are what I'm looking at now. So in this case, you can see the range is very, very far wide. We'll still have this level here. I'm going to mark it out. So we still have this level here. I'm going to mark it out. Then we have, so price is dropping now. So we are going to see if price is going to come to this level before showing intent, or it might just stop somewhere. It might take out this liquidity and start moving up. We don't know. So this is how we look. We have to wait for market to do its thing. You can see we took out that low. Now look at what market did. The moment we took out this low, right? When we took out this low, market started showing intent. Look at, first of all, the first intent is to sweep the most recent low, then break the high. All right, we swept this most recent low, then we broke this high here. Then after breaking this high, you can see how market came back to mitigate this same level. If you go to the 5-minute time frame, which is the entry time frame now, you're going to see that we formed this engineering liquidity right here before we tapped here. All right, before we tapped into this level. So this is like the first intent that market has changed structure. But if you still want more confirmation, you can wait for like um another break before you start entering. You can still find opportunity. That's if market presents it. All right. So after this now, this was what market did. So we went ahead to break this high. So we have like double break now, which like confirms this trend that we finally changed trend to the upside. All right. So we don't have to start waiting for market to tap into this level again. All right, because this particular model is looking like this one exactly. All right, so we've broken structure now. We'll have to look for the next key level where price, might likely come to before we continue the trend. And where is that key level? Look at where price has tapped into severally. Let's check out this low, and let's see. Look at here, market has tapped here. So this is support level, this is support level. Same thing here. Same thing here. It must not be perfect. Same thing here. Market has actually rejected off of this. And aside that, we'll have this Asians low liquidity right above this particular level. All right. So we can just mark out an order block from this level and put our position to stop loss at the low. You can decide to put it here to be on the safe side. You can decide to put it here again. So we target a 1:3. This is our target, this high. But usually, if you target this high, it will give you 2.8 RR. You can take it a bit higher if you want to meet your target, because most of the time it will just do more. It can just do more. So let's see what this does. See how price. So reason you need patience. You can see we drop close to the level, then we bounce up. That was how market did. See, we finally got to the level. You can see how market started reacting from that level. This is another thing again. You can as well get another setup. Look at this, another setup. We'll have this low, then market broke structure. We'll have this high. So let's see where market changed structure, substructure to pull back price into this discount zone. This was the level, and as you can see, after market broke this level impulsively, we started reacting from that level. All right, we started reacting from that level, and finally we push down to take out this area, this liquidity here. And you can see for market to show you that it will be buying now, it's time to buy after taking out liquidity. Look at the first intent. The previous structural high, it took it out, it broke it. Then after breaking this high, what comes to mind next? To buy, right? This is the nearest liquidity here. Then we'll have this order block here. This is a clean order block here with imbalance. So if let's say you did not catch this first move, you can as well add another position right here. All right, with your stop loss right below this low, and same targets at this high. And let's see how the two position goes. Same thing here. You can see how that smashed. All right, so I would have made the breakdown for all the setups, but I think I'm going to do a part 2 for this particular breakdown. All right, but this is for this. I hope you understand the model, and it's something that you can backtest and try out on your strategy, on your chart. If you trade breakout and retest, this is simply market structure, using breakout and retest and key levels. So that's basically what I trade as well. So that will be all for this video. I'll be dropping a part 2. So make sure you subscribe, you share this video so other traders can learn from it as well. And yeah, I'll be making a part 2 explaining the other setups. I'll see you guys.